Dear viewers, today I'm going to be talking about the top 9 deductions for your rental property. So, this is for my folks in the real estate space. We're going to be talking about the top 9 deductions for your rental property. I remember from the beginning of this year, there was a couple of industries that I desired to take a deeper dive and look at some of the tax opportunities, to scale. And one of them is the real estate. So I'm bringing this information to all my real estate investors. These are going to be the top 9 deductions, tax deductions for your rental property. Okay, and we're going to categorize them in two categories: cash and non-cash. All right, and on the cash side, the number one rental deduction is repairs. So every repair and maintenance that you're able to complete on your rental property is a tax deduction. Okay, and the second one, which is a cash deduction, professional fees. All right, do not hesitate or be afraid to pay professionals, my folks in the real estate, because these are tax deductions, these are tax write-offs. Okay, professional fees that you get to pay to your lawyer, you get to pay to your business consultants, you get to pay to your accountants, you get to pay any fee that you incur, which is a professional fee for doing business, is a tax write-off. Okay, it's a deduction. Now, property taxes. Number 3, property taxes. The taxes that you pay for your property are tax deductible. Okay, remember that every tax which is paid towards your property are write-offs. The fourth one, we're going to talk about wages or management. Okay, wages or the property management itself. So every cost involved in the day-to-day or the operation of rental property activities is a tax deduction. Okay, so whoever gets paid for the operation of the rental property, whoever is involved in the management or any cost that is the management related cost, is a tax write-off. And the fifth one is the mortgage interest. Okay, the mortgage interest, obviously, is a tax write-off here for all my landlords who have rental properties, irrespective of whether you live in this property or not. You're encouraged to take this deduction and mortgage interest. Okay, um, the we're going to go to the sixth one now, which is a non-cash deduction. It's called a depreciation. This is huge. Okay, the IRS standard deduction for the useful life of an equipment or property or a building is 27 and a half years. Okay, you can take a depreciation for 27 and a half years. For other equipments, for some they are 5, for some they are 7. So you got to know exactly what property is. For example, land is a non-depreciable as a factor of production, so land would never depreciate. But however, the building on the land will depreciate, so you're going to take a depreciation on that building, and that's a huge area for tax deductions right there. And then the seventh, which is a non-cash deduction, is the capitalization, the capital gain exclusions. Okay, all your capital gain exclusions are also, a huge opportunity here for tax deductions. Okay, after your depreciation, your capital gains, and active. Well, now when you're in real estate, okay, it's either you're earning money actively or passively, right? So all your passive expenses are also tax deductions. And then, finally, last but not the least, is home office. Okay. If you're conducting your business, you're managing this real estate property from a home office pays. That's also a tax deduction right there that you can take for the use of that home office space, and to offset your rental income, so that it's able to reduce your taxes. All right, so these are some of the nine main areas where you can take massive tax deductions for your rental property. And this is for my people in the real estate. I want to encourage you that, or everyone who is not yet into real estate, that the real estate is definitely a huge vehicle for tax strategy and for tax planning. And I'll be happy to work with you, my clients, some of my existing clients, and the new ones who are going to be onboarding, especially in the area of real estate. That there's tremendous opportunities here for for strategic planning and tax planning, yeah, and opportunities to build wealth, and also opportunities to reduce your tax liability and maximize your refund. Thank you for watching, and stay tuned for more.